Good afternoon. Welcome to Midcap Radar. I'm Reema Tendulkar. With me is Ekta Batra, and these are the top stories that we're tracking this Thursday afternoon, 1:30 p.m. Midcaps flat amid a cautious trade on the street. The Nifty trades near the session lows as bulls take a breather from the pullback rally. Metals outperform.
Sequence Scientific rallies after calling off the acquisition of Tata Pharma. The veterinary pharma company was valued at over 200 crores.
Block deals drive moves in select mid-caps like Gokuldas Exports and Home First Finance. Promoter Clear Wealth Consultancy sells half of its stake in Gokuldas Exports, while a large venture capital fund is expected to have sold in Home First Finance shares.
A big capex boost powers Max Healthcare. The management tells CNBC-TV18 the hospital chain will spend over 4,500 crores to add 2,800 beds over the next 4 years. The investment will be funded through internal accruals.
Religare Finvest repays 2,178 crore rupees to lenders in a one-time settlement. Parent Religare Enterprises Management is optimistic. Rating agencies will look at Finvest as a new company without legacy issues. Tell CNBC-TV18 they will now attempt to raise 600 to 700 crores over the next couple of months.
Okay, well, that's on all of the top stories that we're tracking this afternoon. Well, for the markets, it's definitely weak now for the Nifty, so it's trended lower as we speak, so down around 100 odd points. We have the Sensex also, which is shed off over 300 odd points at this point in time. So low point of the day. The mid-caps have been fairly resilient, just about a flat line for the broader markets. Remember that the mid-caps as well as the small caps have been relative outperformers on a week-to-date basis. So let's see whether that sustains or not. We have Shrikant Chauhan of Kotak Securities joining in to discuss what he's strategizing this afternoon. Shrikant, hi, welcome to the show. Well, we're towards the end of the week. We have a lot of stocks which are buzzing despite the red that we're seeing on the indices. So what would you recommend?
Yeah, good afternoon, Rima. Good afternoon, Ekta. I think, this particular market is going to spend some more time within the broader range of 17,700 or 750 on the high side and 17,600, 550 on the downside. If we see the market is dropping to the levels of 17,600 in today's date, then certainly we should look for adding some long positions because we are expecting market to remain in a range. But if we see any rebound to the levels of 17,750, then certainly we should look for reducing some positions. Okay, if we go through with the stocks, then yes, there are few stocks which are really doing well. From the metal basket, we like Steel Authority, which is currently trading at 88 levels. There we are seeing the levels of 92, 93 in next few days of time, and it may even touch the levels of maybe 100. So it's a buy at current levels with a stop loss somewhere close to 85. And the other stock which we like is Thermax from the capital goods and infra space. There we feel that the stock is forming higher top, higher bottom, and the next level to watch out for would be 2375, 2400. So again at 2180, it's a buy with a stop loss around 2140.
Okay, thank you very much for that. Get into a break. As we do that, here is a quick programming note. On the 14th of March, CNBC TV18 will host what is India's largest summit on gender parity in Delhi. Women leaders from all walks of life will come together to brainstorm and help take decisive steps to bridge gender inequality that exists in India and across the world. The event starts at 4:30 p.m. on the 14th of March, and you can catch all the live action right here on CNBC TV18.
Welcome back. Well, it's weak for the markets, but there are a lot of stocks which are buzzing around. Let's start with the first corporate that we have on our radar this afternoon, Mayur Uniquoters, which is the maker of artificial leather, posted what was a strong recovery in gross margins in the third quarter. The company aims to, in fact, double its exports and also bagged an order from BMW in South Africa. We have Suresh Kumar Podar, who is the chairman and MD and CEO of Mayur Uniquoters, who's joining in now to discuss the business. Mr. Podar, hi, welcome to the show. Well, first I wanted to start by talking about polyvinyl chloride prices, which increased in January in terms of prices for the first time in 9 months. So there's been some amount of uptake that we've seen in PVC prices. Can you just tell us where do prices stand at this point in time if you had to compare it to, say, a year ago? And how do you expect it to trend?
You see, our sales in 21-22 was 625 crores. And this year, we expect more than 750 crores. And going further, we will, in next 2 years, I mean, 23-24 and 24-25, if you calculate, it will be 1100 crores. And raw material prices has surely gone down a little bit. It's all demand and supply. For a few months it went down, now again it is stabilized. And it all depends on China, how the China is moving. If they are moving fast, then the price will increase. Otherwise, it may stay as it is.
Okay.
But it's very difficult to predict.
Got it. That's on pricing, sir. Could you help with some numbers on volumes? In Q3, your volumes were 64 lakh, which was a drop compared to the 75 lakh meters that you sold in Q2 in terms of volumes. What is the run rate so far in Q4, January and February? What are the volumes?
You see, I can tell you, total volume in 21-22, it was 247.97 lakhs, right? In 21-22. And in 23, we expect 278.48. That means increase in 12% volume. In whole year, I'm talking. And in 9 months, it has increased by 7-8%.
Okay.
Because I tell you the reason. Recently, we have got a good opportunity in automotive exports, and we got so many orders, which has already started supplying, and it goes with some models will start after 3 months, some model will start after 6 months, like that. So there is a huge increase in the automotive OEM export, which you see in this year, we expect FY23 18.50 lakhs meter in a whole year. And it is going to be just double in next year, 23-24. It should be 36. And in 24-25, it should be 45. This I am telling with the orders in hand.
Okay.
In confirmed orders I am talking. Other than this also, there are so many orders are online. I'm not committing. But I'm trying to say it will be further more.
These are the auto OEMs, right? The auto OEMs confirmed volumes will be 18.5 lakh meters in FY23, 36 in FY24, going up to 45 at least.
This is only export I'm talking.
Only export.
Okay. OEM export.
OEM exports.
Okay.
Yes.
So, I just wanted to dig a little deeper with regards to your OEM exports, because you just won an order from BMW's South African plant. You're already doing business with them where you supply around 3,000 to 4,000 meters per month to the BMW Thailand plant. So I'm assuming that they're happy with your work and they're expanding their contracts. Is there a chance for them to probably expand it further to other geographies besides just Thailand and South Africa?
You see, this automotive industry go very slow. And they first see that how is your supplies, how is your quality. So because from 3,000, we are increasing from after 2 months to 25 to 30,000 meters per month. So first of all, they will look into it for next 6 months or 8 months. After that, they will decide. Rather, they have told us, even Mercedes and BMW both, that if you put up a plant in USA, we can give you immediate orders. So we are working on that also, because the way automotive export market is increasing, and of course Indian market is also increasing. So because, the better margin is in export. So I'm concentrating maximum on export.
Okay, what is the capacity utilization you're operating at, Mr. Poddar?
What?
Capacity utilization?
Oh, capacity utilization at the moment, you can say it is about 70%. 70 to 75.
Okay. All right. Capacity utilization of 72 to 75.
But this quantity, what is increasing, it is more than sufficient what capacity we have. But the amount will increase substantially because of high cost material.
Okay. All right, Mr. Poddar, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's Mayur Uniquoter sounding extremely optimistic in terms of the order inflow and the order book going forward. That stock is currently just a bit sluggish, down around 8 odd rupees on an absolute basis today. Time for a short break. We'll get you our segment Midcap Spotlight once we're back. Stay tuned.
Welcome back. The sell-off is accelerating now. We're approaching 17,600 for a greater part of the show. With the last 30 minutes, we were holding up around that 17,650 mark. But there you have it. In the last 10 minutes, the markets have nosedived and taken a turn for the worse. Quickly to run you through some of the stocks which are exerting pressure on the markets right now. Well, the Adani Group stocks continue to be the top two losers, Adani Enterprises, Adani Ports. You've also got weakness in ICICI Bank. Pull up that stock. ICICI Bank is down 1.5%. IT names like Infosys at the low point of the day. Hero MotoCorp is struggling in trade. That's down 1.5%. And big boy, Reliance Industries and ITC too under pressure. But let's talk about the stock which is on our mid-cap spotlight. Bosch, it's hit a fresh 52-week high today. Sonia is here to tell us more. Sonia.
Well, thanks a lot for that. Bosch has hit a fresh 52-week high today. But if you look at the performance of the stock from the lows that we saw in the month of May 2022, the stock is now up almost 40%. There are a couple of drivers for Bosch over the next many quarters, and I think that's what the street is penciling in. The first is the electric vehicle opportunity. Now, Bosch is the largest player in the EV component space globally. It supplies to a lot of EV domestic OEMs as well as global players, and is now focusing on localization. So Bosch has decided to invest 2,000 crores over the next 5 years for localization of components, that is manufacturing the components locally, and that will help them bring down their costs. They've also acquired businesses for battery systems and ECUs and is looking to improve their market share and other components as well. So electrification of two-wheelers and three-wheelers is a big opportunity for Bosch. Apart from that, Bosch also offers a complete solutions for hydrogen-based powertrains. They offer hydrogen engine systems, fuel cells, electric systems and tank systems as well. So these are the two big opportunities for Bosch. Other than that, Bosch is already the fourth largest player in the auto aftermarket segment. In fact, in the year gone by in 2022, Bosch recorded its highest ever sales per EBIT in the auto aftermarket segment. They also aim to achieve a strong double-digit market share in FY24. Talking about the earnings gone by, it was a very strong showing for them in Q3. In fact, the auto segment revenues grew 18%. The gross margins improved 80 basis points as well. But the only thing that you need to watch out for now is the valuations of the stock. After the 40% run-up that it saw from the lows in May, the stock is now trading at a PE of almost 30 times FY24 earnings. Back to you.
Okay, all right, Sonia, thanks very much for that. That's on Bosch. But let's shift focus to our special series, FinStreet. Today, we put the spotlight on commercial vehicle financiers. This sector saw robust growth in Q3 of FY23. Abhishek Kothari breaks down what fueled the growth for these companies in the quarter gone by.
Well, in FinStreet today, I'll be covering commercial vehicle financiers who have reported robust Q3 FY23 business momentum. Disbursals growth on a sequential basis has been anywhere between 8% to 20%, while AUM growth has also been robust, anywhere between 4.8% to 13% for all the lenders. So what has helped the CV sector? Overall, if you take a look from FY17 to 9-month FY23, CV sales have been pretty strong. Blended realization has also improved massively, especially especially for medium and heavy commercial vehicles. So for example, Ashok Leyland has seen blended realization increase by more than 44% between FY17 to 9-month FY23. The blended realization is a function of price increase as well as tonnage increase. AUM growth trend of all the players. Generally, the growth trend has been on a YOY basis anywhere between 13% to 17%, and on a sequential basis anywhere between 4.8 to 4.9%. However, outstanding growth was seen for Cholamandalam, who has seen YOY growth of more than 31% and 13% on a sequential basis. The growth for Cholamandalam has come in from the fact that their disbursements to AUM ratio has been at 68% when compared to peers having it at less than 28% and around 30%. So good growth also means that net interest margins should have improved, as we know that NBFC lend to high yielding customers on any product. However, Cholamandalam's net interest margin has remained flat despite AUM growth. In a rising interest rate scenario, Cholamandalam's net interest margin has remained flat, while net interest margin has declined for M&M Finance. Cost of funds has impacted the net interest margin momentum of these two companies. If you take a look, their interest income has increased quarter on quarter, both for Chola as well as MMFSL, while their interest expense has grown massively or higher than that compared to peers on a sequential basis. Borrowing mix remains widely distributed for the likes of Shriram Finance as well as Sundaram Finance, while Cholamandalam does not have access to deposit and has one of the lowest securitization portion as a percentage of the borrowings when compared to peers. Another point to note is that Cholamandalam also has the lowest provision coverage ratio when compared to peers. So Shriram has stage 3 coverage ratio of 50.7%, M&M Finance at 59%, while Cholamandalam has it as around 26.7%. Going ahead, lenders like Shriram Finance, Sundaram Finance and M&M Finance can actually raise funds via deposits at attractive rates from their customers. So Cholamandalam's restriction on borrowings profile when compared to diversified profile of peers can actually hurt its growth in the coming period, or let's say in the next 6 months or so, just in case it fails to borrow at competitive rates from the market. Strengthening of balance sheet may actually hurt return ratios for Cholamandalam if at all they choose to do so. Cholamandalam's performance against peers in a rising interest rate scenario needs to be seen with respect to net interest margin as well as return ratios.
Okay, all right. Abhishek, thanks very much for that comprehensive take. On that note, we need to wrap up on Midcap Radar. MF Corner once we're back. Stay tuned.